This week, we're talking consumer sentiment. We'll take a closer look at retail prices and those supply and demand numbers, and a big jump in cattle prices. Welcome to the Weekly Livestock Market update on Brownfield. I'm your host, Meghan Grebner. With us to talk all things markets is University of Missouri's Scott Brown. Good afternoon, Scott.
Good afternoon, Meghan.
It is nice to talk to you from the comforts of my own studios for the first time in a couple of weeks. It's been a fascinating 10 days on the road, but it definitely was nice to be back today or this week.
I'm glad you brought higher cattle prices back with you this week.
I brought higher cattle prices and higher temperatures, too, I think is what my gift was upon my return. All right. We'll dig into the details of all of these reports from this week coming up. But first, let's recap what happened this week in the markets.
Yeah, Megan, on the cattle side this week, live fed cattle were $2.75 a hundred higher. Those feeder cattle markets, heavyweight cattle were much stronger, but generally I'm going to call steady to $4 higher this week. We also gained on the futures side this week. The August live cattle futures contract was up $5.70, and we gained $7 on the August feeder cattle contract. Choice box beef was also higher this week, up $1.85. It now sits at $3.18. So although below where we peaked last year, we gained again this week. I think that's the positive. On the hog side, cash barrels and gilts, they were down 60 cents this week, while the July lean hog futures contract was up 40 cents on the week. We also lost 80 cents on the pork cutout value. We had lower across the board in those components of that pork cutout value.
It definitely was a very strong end to the week on the future side of things. As we take a look at kind of just this up and down that I would assume we're probably going to have to buckle in for a roller coaster ride as we go through the next couple of months.
Yeah, for sure. So, all right. So we're setting at or near record prices. I think markets are always looking for what are the things that are going to break markets, and it doesn't take much to get them to go lower. And then we know we're really short beef supplies and we go higher. I don't think that cycle changes anytime soon. I've said here several times, and we'll say again, I'm not sure we're done with record cattle prices. It's hard to say when we're at records already, but that volatility is probably with us for a period of time. You and I say risk management almost every week, and this is another opportunity to say, so if not all operations need to do this, but if you're one that can't stand a lot of risk, maybe there are reasons you want to do some LRP or something else to make sure that you don't hit the lows that are probably coming over the next 6 to 9 months of this volatility of up and down that we seem to be in today.
It definitely, I think maybe the conversation is we're not looking to hit the highs every time. We're looking to make sure that our operation can continue to function and hopefully be in the black as it's doing so.
Correct. And I will say, so we've had a few issues that have been pressuring cattle prices this year, but thus far we haven't had a big issue. Let's not forget a big negative issue could really cause some havoc in these markets. The probability of that happening is not zero, although it is low.
All right. So let's talk a little bit on the slaughter side of things. As we take a look at those, how have both cattle and hogs held up this week?
Yeah, so USDA tells us for the week ending June 15th, they're on a 615,000 head of cattle. That's 1,000 head more than we did last week, but it is 21,000 head less than what we did last year. On the hog side, a run of 2.39 million head this week. That's down 32,000 head from a week ago, but up 64,000 head from what we did a year ago.
And as we're talking about those numbers, how are they running year over year?
Yeah, so we now sit here down in terms of cattle slaughter 4.4%, but on the hog side, we're up 0.9% on hog slaughter year to date.
All right, we're going to start off with consumer sentiment. Scott, as we take a look at the June index, a little bit of wind out of our sails for the month.
Yeah, it seems like we're picking up more of this kind of negative when we look at some of these general consumer trends. So the June consumer sentiment index down 5.1% from where we were in May. Maybe the one that's most troubling is when you look at the current economic conditions component of that index, it was down 10.2% in June relative to May, also down 9.3% relative to a year ago. The overall index was actually still 2.2% higher relative to a year ago. So it tells you a lot about kind of that current situation, and consumers, I think, more concerned about just high prices and what they mean to their overall spending.
How nervous do we get in terms of consumer sentiment as it relates to demand, and how all of that is so dependent upon each other right now, especially when we're thinking about it in terms of prices?
Yes, so we have to be concerned. I think you and I have voiced this concern about consumer demand for many months, and frankly, consumer demand has been for meat has been, relatively strong. You keep worrying though that if consumers decide to make some significant changes in meat purchase habits, that it is problematic, and we are pushing, especially on the beef side, high prices at consumers today. But thus far, although we keep talking about it as a concern as we should, it has not, frankly, not had a lot of impact, and demand remains fairly strong thus far.
All right, let's take a look at retail prices for the month of May. Start off with beef.
Yeah, on the beef side, the choice beef retail price was $8.11 for May of this year. That was actually 4 cents lower than where we were in April, so a turn down that we haven't seen for a few months. When you look at year to date, we're talking about a beef retail price that is 4.7% above the same period in 2023. We're seeing similar things happening to some of the individual components here. Sirloin steak prices, they fell 10 cents May relative to April, and ground beef also fell 9 cents relative in May relative to April.
When we think about where beef prices are, how I think about the fact that there are still, while beef prices are relatively high, right? Like we're talking about a little bit of a drop back. They're still much higher than they've been historically. There are still really tasty value cuts of beef available. How important is it to understand the cuts or have the conversation with your butcher if they're available, to be able to you don't have to cut it out of your grocery bill, you don't have to take it out of your cart, because there are those options that are available?
Well, I think certainly you address the big issue of consumers not as familiar as maybe they once were with some of these different cuts and how to use them, and where value might come from, as we think about different cuts. It's only so as we know, beef supplies are only going to get tighter, which I think makes this discussion more relevant moving forward. Because if a consumer says, "Hey, I need to start to think about buying down," don't we want them to buy down? If I'm a cattle producer, I want them to buy down in the beef side. I don't want them switching to another meat protein in place of that beef.
And I don't normally plug websites, but I will tell you, I think it's beefitswhatsfordinner.com. Great recipes, great information about different cuts that are available. And as a consumer and as somebody who cooks at home, it's great to have those types of resources to be able to know what's a value buy and what I can do with this value buy that I might be picking up in the grocery store. On the flip side, pork prices for May up slightly.
Yes, that's correct. The pork retail price, $4.92 for May of this year. That was 11 cents higher than where it was in April. You look at the components, pork chops up 12 cents month over month, and sliced bacon up 18 cents. And when you look at year to date, we're seeing pork retail price that's 1.3% higher. So we are moving higher in that pork retail price. Maybe that's good news in terms of maybe higher hog prices, but a little different story in beef versus pork this month.
All right. To wrap up, Scott, the big report this week in terms of the livestock sector, supply and demand numbers were out, and some small changes to the June forecast.
Yeah. So USDA is still making some modifications. I say, for pork, beef and pork markets in particular, the biggest one for 2024 was really what was another additional 100 million pounds of pork exports that USDA is now forecasting for 2024 in the June WASDE. Not too surprising, given that I've been talking about month to month just the strength that we've seen in pork exports. That's really the big change for 2024. Now, when you look ahead to 2025, and again, remember, USDA is really just starting to give us that 2025 forecast. So I expect more moving around. The big one here is a 245 million pound increase in beef production for the June report in 2025 relative to what they said last month.
And that's not coming from more cattle. So that increase is likely coming from where?
So I think when we look at it, it's USDA looking a little bit more at weights more than maybe they're looking at cattle in that change this month.
All right. That does it for this week. A couple of big reports coming out next week. Livestock slaughter, cattle on feed. I'm going to let you preview those for us. And I have a pretty good idea what you're going to be watching for.
Yeah, so I feel like a broken record when we have this conversation because I think livestock slaughter, especially without a July cattle report, we're going to be focused on beef cow slaughter in that report at least a little bit to see whether there's any signs of building. I can hear anecdotally stories on both ends of the spectrum when it comes to this idea of whether cow herds are growing. I think that might have a little bit to do with, we do have some operations that are already trying to grow. Other operations maybe not as well off from a forage standpoint yet, not growing. So I'm not surprised anecdotally to hear a lot of that all over the board. What we actually get out of that livestock slaughter report will be important. And of course, cattle on feed placement number will be big as well. And also what happens to on feed inventory when we were below a year ago last month. Will that continue in this month's report for cattle on feed? Just how tight are we going to get will continue to, I think, to be the focus.
And we don't have heifer data in this month's cattle on feed, or do we? So
Megan, I don't think we do this month. I think we're still a month away, but you catch me not remembering for sure whether we're on the right quarter or not yet.
I think I want to say it's in July, but I couldn't remember. Thinking about that, Scott, too, what do you need to see in terms of beef cow slaughter to show? And I kind of gauge you about this when we chat about this every month. But when you think about that, what's going to show that we're maybe starting to retain and we're not still liquidating overall?
Yeah, so it's a really excellent question, because I'll say, don't forget we have fewer cows. So normal movement out of the herd is going to result in less cows being slaughtered already. So you've got to, we've got to talk about 20% reduction. I think in some of these reports before we're going to start getting serious that maybe we're holding cows. And as you know, we can build both ways, right? So we can either hold cows longer, or we can try to add heifers. And on the percentage of heifers on feed, I still say we got to get 34% or below before we're going to talk about any kind of serious building there.
Anecdotally, as you're talking about this, and we're talking about growth in different areas, how much is that changing regionally, and how much do we get into that missing of data and not having data to see like maybe where those pockets are that are starting to see growth?
Yeah. So it's hard. All right. So to the data side, I always say I want more data, not less data. Then at least I can look and try to see the different pieces and maybe provide a better outlook of what's happening. So I always want more data relative to less. Do I think that we have differences as we move around the country? I do. I think it's as much going to depend on just what's happening in that local area in terms of forage availability as anything else. I will say, so I hear a lot of, we're never going to build a herd again. And I will just answer that question with, at some point, I believe prices will be high enough to encourage somebody to decide to add more cows, especially if they have available forage to add to that base as well. So do we ever return to where we were in 2019? Probably no, is the answer to that question. We also don't need that many, as we get more efficient, we don't need that many cows. So I think those are all important things to keep in mind as we continue to have the conversation about when do we build. And certainly things are in a better place to build than they were 12 months ago. But we're going to have to wait for the data to I think, really start to call that. And as some have already been out there saying, hey, when we start building, we're going to get even tighter in current beef supplies. And that's absolutely correct, which when you and I talk about, and I say, I don't think we're done with record cattle prices, all of that goes hand in hand.
God, it's always great to see you.
Likewise, Megan.
So for Weekly Livestock Market update delivered to your email box every Saturday morning, go to brownfieldagnews.com. You can also submit questions and comments. And for what a rundown of what's happening in the markets daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner for Brownfield.